Everybody, this is Dan Sheridan, and I'm going to discuss my trading plan, what I'm looking to do next week. I think it's good to prepare for the week ahead. And as we look, today is July 7th. As we look at the week, that will be 10th through 15. You look at news a bit, and as you look at, I just look at, a lot of times I'll look at Market Watch. You just type in Market Watch calendar, and it'll go over the news for next week. Is there anything that kind of pops out at you? Maybe the CPI coming out Wednesday morning at 8:30, could be something to look at. And that's about it. Earnings season is starting. I think the big week in July to look at will be the 26th, right around there, where the Fed will come out with interest rates. They're actual what they're going to do. And also that you're right in the midst of earnings season. So next week should be relatively quiet, which is good for range-bound traders. So here's my plan. And I just want to encourage you. I think, a plan that you can attain to. Now, this is just range-bound. I'm not including spec trades. I'm not including, as I would call it, long portfolio retirement stuff like covered rights or long diagonals or types of things. So just going to give you a direct plan, the trades I'm looking at right now. First, I'll take a look at the SPX, and you can see we're up 27 points today. And, after going up 300 points from in the SPX from literally the end of May till middle of June, that big move, we've been more or less range bound for the last 2.5 weeks, which is what you want as a range bound trader. You want to see some type of range which we're in. So that's good in terms of doing your normal size. The other thing we look at is, as far as getting going here, if I look at VIX, I'm more looking, if I'm looking, most of the trades we're going to put on will be 10 to 35, 40 days from expiration. We'll do a few like today, a little bit shorter. So I'm looking at getting out of these trades within probably a week, maybe 20% of the duration. So I'm more, concerned about VIX in the last 5 weeks, and I want to look at the range 5 to 6 weeks. So we would go back here. Okay, here's towards the end of May. You had a VIX around 19, the lowest 12.73. Let's call it 13. So you have a range of 13 to 19 in the VIX, and that's what's and once I see it's relatively range bound, which it is the SPX for range bound trades, if we're like between 13 and 19 and VIX is 1459, down a bit today. So a little bit in the lower end of the range, that's good perspective. Now that we have those out of the way, what are 3 trades I'm looking at next week? I'm going to put them on Monday, a double diagonal, Tuesday, a butterfly, Tuesday or Wednesday, a butterfly, and Thursday, a calendar. The double diagonal and the calendar, and I'll just, for purposes here, for people, I'll just put, as far as the minimum units, the double diagonal will be about $700-800. The calendar $700 or $800, and the butterfly is twice that at $1,600. The double diagonal and calendar benefit if volatility goes up, butterfly benefits if volatility goes down. If you're more of a smaller trader or beginner, you could paper trade or do similar trades in SPY. So first one, double diagonal. This is one that I'd be looking to put on Monday, not today. Today's Friday, the planning day, but my plan for next week. On Monday, I'm going to sell Friday expiration, July 14th. And then by the Monday expiration, July 17th. So I'm not going to put it on today, Friday, July 7th. I'll put it on Monday, the 10th. And so double diagonal, I'm going to sell the out of the money 44.70 calls and I'm going to sell the out of the money puts 4,400. So that's called a short strangle. And then I'm going to buy for a double diagonal, I'll buy my long call approximately 5 points further out of the money, 3 days further out duration. And then I'll go 5 points out of the money on my long put, 43.95. And the nice thing, this trade will be a 4-day trade when I put it on Monday. I'm looking to be in the trade 1 to 2 days, which if you look at an expected range, which they have a think or swim, if you look at an expected range, if I'm looking to be in the trade a couple days, 2-3 days is, even a 3-day expected range is 27 points. That's like a standard deviation. So it's saying there's a 68% probability over 3 days will be up or down 27 points based on the current level of VIX 14.5. So this gives us plenty of rooms. If you look, if this is the current underlying, you got plenty of room till your expiration break evens, where your expiration graph crosses zero. You could see you've got about 70 points to the downsides, 60, 70 to the upside. So, and that has a lot of theta on it. On an $800 trade, that's about 10% in 1 day that you could get in theta. Again, these are theoretical numbers, but that's what I'm looking at next week on Monday. Overall, yes, if the market's not range bound or something crazy happening, will we divert our plans? Similarly, if you go to the beach with your kids and there's lightning, will you still go in the beach? Of course not. So that's Monday. Now we go to Tuesday or Wednesday. It'll be Tuesday. I'm going to put on a butterfly. Again, all of these are trades that give you positive theta or time decay. So here's a call. I'll call it a broken wing butterfly. And again, I diversify. I like to diversify when I put trades on, diversify the durations, diversify. This trade benefits of volatility goes down. This trade benefits of volatility goes up. Again, your two main risks on range-bound trades are price and volatility risk. So I want to diversify some of those. Again, range-bound trades, I'm more delta neutral. So here I'm selling the at the money 44.40 in the calls. I'm buying the in the money 43.80 calls. This is in the July 28 expiration, about 21 days out. And then I'm buying the 44.90s, 50 points up. So the distance between my short call, my upper strike out of the money call is 50. The distance between my short call and my in the money long call is 60. So this would be a broken wing butterfly, broken wing. If the distances between both sides from the short was the same, it'd be a balanced butterfly. These are unbalanced butterflies, and I do them for the main purpose to get the deltas near neutral, and then we always were positive theta traders. So so we looked at a double diagonal. It's about an $800 trade. We look at the broken wing butterfly. It's about 1,600. And then the last one, we'll look at a $900 roughly calendar. So you could see we've got about $2,400, $3,400, $3,300, $3,400 here. So no matter what you're set, here's a small little portfolio. And I'd be looking for, maybe 7 to 10% on the capital over a week. So on 3,300, be looking for a couple $100. Now, the last trade calendar, because I want to be a little bit long Vega with us at the lower end of the range in VIX, and I'll show you that in a second. But here's a calendar, and I'm just plopping it at the money, right? Unless I have an opinion. If I'm bullish, I'd put my short strike, 30 points or 40 points up. If I'm bearish, put my short strike 30, 40 points down, but I'm not. I don't know which way we're going next week. And believe it or not, you don't either. So I go at the money, 44.38. Sorry. This is 44.40. And you can see I'm buying my long 5 points further out. I'm paying about $8.90 for the calendar, pretty neutral, a decent theta, and you make money in this area. So this would be if I put this on next Thursday, all right, if I put this on next Thursday, the expiration of the short is 15 days from expiration. So it'd be a 15-day trade when I put it on next Thursday. When I put this trade on Monday with the same expirations, from Monday, the expiration of July 14 will be 4 days. So the double diagonal is a 4-day trade when I put it on Monday. The calendar is a 15-day trade when I put it on next Thursday. And if I put the butterfly on Tuesday of next week, which would be 7, 8, 9, 10, 11, that'd be about a 17-day trade. Did I do that right? Next week. So I'm putting these on Monday, Tuesday, and Thursday of next week, same expirations as you see here. The only difference would be on the butterfly and the calendar, I'm setting them up at the money. So if we're at a different price, I do the same, 60 down in the calls, 50 up. It's just, if we're at 44.50 or 44.60 or 44.20, I'm making my short at wherever it is, going 60 down and 50 up. On the calendar, I'm keeping July 26, July 21, but wherever we are next week, I'll go at the money. And this is the gist of it. We can't go over everything, but so this is a little bit, I'm just trying to introduce looking at the market based on the market and just having this regular plan as you get in. Most people are pretty busy. So Monday, double diagonal, Tuesday, butterfly, Thursday, calendar. And if we have to tweak it based on market conditions, we will, but I'm going into next week with a plan. If I can help you at all, you can email Dan@SheridanMentoring.com, but you can check out Sheridan Mentoring. And for all the stuff we got going up there, I think we still have a few days on our July 4th on-demand classes. You check out our site. Folks, have a nice weekend. Thanks.